عليكم. الشيطان الرجيم. بسم الله الرحمن الرحيم. اشرح لي صدري ويسر لي أمري. سبحانك لا علم لنا إلا ما علمتنا إنك أنت العليم الحكيم. رب زدني علما يا رب صل وسلم دائما أبدا على حبيبك خير الخلق كلهم الحبيب الذي ترجى شفاعته لكل حول من الأحوال مقتحم. فسهل يا إلهي كل صعب بحرمة السيد الأبرار صلى الله عليه وسلم. اللهم جنبنا الفواحش المعاصي والخطايا والزلل. لا إله إلا أنت. بسم الله الرحمن الرحيم. Assalamu alaikum wa rahmatullahi wa barakatuh. Once again to everybody. If you can just confirm, you can hear me, please.
Wa alaikum assalam wa rahmatullahi. Yes, we can.
So last week we started, or we had a very brief introduction to Islamic banking. I'll just very quickly go through some of the slides, just as a reminder and a recap, so that it sets the zone for today's lesson. So the main thing is financial intermediation, okay? And intermediary is anyone or anything which comes in between two other parties. So the bank, its role in the economy is that of a financial intermediary. So a bank is one of the financial intermediaries that we have. And what's the role that a bank has? It connects the savers and the borrowers. So those economic agents with surplus funds, it connects them to those economic agents with deficits or those who need those surplus funds. So the savers, they'll deposit their surplus funds into the banks. The banks will then loan those deposits out to the lenders, and the lenders then pay interest, conventionally speaking, and the banks will then again pay a minimal interest to the original depositors. Now, the financial intermediation which these banks do, they actually do serve a very important role in the economy. Because even if we take the name of a bank away, you'll always have people that have extra money, and you'll always have people that will need that money. Now, because of some of the problems of, number one, finding a person that will lend you the amount that you need, then from the lender's perspective, finding somebody who you're willing to lend to, but what guarantee do you have that they will be able to repay the money, that they will repay the money? So all of those jobs are done by that middle man or that middle institution, which is obviously the bank. So the risk transformation, that's where that comes into quite a bit. So again, financial intermediation of flow of funds. We have lenders on the left-hand side, and that could be the household sector, that could be the business sector, the government sector, or even the foreign sector. They transfer their funds to the financial intermediaries. The financial intermediaries, they will then, using those deposits, make money themselves by investing in financial markets. Now, the reason they'll do that is, number one, for their own profit, but number two, they'll also give extra profit back to the lenders. Okay. Then the financial intermediary will also lend those funds out to borrowers, and who will also be from the household sector, the business sector, the government sector, and the foreign sector. They will then pay back securities and interest and so forth, and then that's how the whole flow within the economy works. Now, we have two problems. Number one, asymmetric information, and number two is moral hazard. Or the asymmetric information that leads to moral hazard and adverse selection, which I spoke about last week. Adverse selection is when the lender chooses the wrong people to lend to. on moral hazard is when the borrower then decides to do something else with the funds that wasn't agreed on from before. So what happens is every lender can't do this research themselves. So that's left to the banks to do. And like I discussed last week, that because of their expertise, they can do the relevant checks. Okay, so that was just a brief recap of last week's lesson. Now, where does Islamic financial intermediation come into it? Well, the concept of financial intermediation itself is just as it's required in any economy, would be required in the Islamic economy also. But what we realize is that financial intermediation in Islamic history is well established. So we've actually got accounts, and Ujovic and one of the academics, and among others, have actually documented this. We have reports and documentation from the time of the Sahaba radiallahu anhum, that although they never called it a financial intermediary, but the concept was practiced. So deposits were taken by certain individuals, although they would call it amanah at that time. And what would happen is, because it would be in the form of amanah, they couldn't do anything with that money. So what some of these individuals started saying is that, look, don't leave the money with us as amanah, leave it with us as a qard. And therefore we can do with that money, we can use it for ourselves as well. And part of using that money is it'd be lent out again on qard hasan, sometimes it'd be used as investment and so forth. So they developed intermediation contracts in order to avoid interest and to facilitate an efficient and transparent execution of transaction and financing contracts. So the concept again was recognized by those early Muslims also, that if an individual is keeping money on behalf of others because of his trustworthiness, then what about using that money for their own benefit, to make money further in a Sharia compliant way? So what they started doing is not taking the money as aman, but rather taking as a debt. Then they'd lend that money out either as qard hasan, or then they would engage in musharaka and mudaraba contracts with people that wanted to borrow that money. So that way they were avoiding the interest element also. Now, Islamic intermediation contracts will come under generally these three branches. Number one, partnership contracts. Number two, trust contracts. And number three, security contracts. So we won't have time to do this in this lesson, but inshallah in another lesson we'll cover this, about the accounts that are available in Islamic banks. But the partnership contract is when the depositor engages in a partnership with the bank. So that's done through mudaraba and musharaka. So what happens in there, very briefly, is that you've got a current account where the depositors don't leave any interest, and the understanding is that this is purely for safekeeping. So the depositor leaves the money in the bank just for safekeeping. He doesn't want anything more. But in the savings account, one of the objectives is that you're keeping the money there as safekeeping, but along with that, the bank will pay you interest also. Now, obviously, an Islamic bank can't do that. So one of the ways that they do come up with the savings account is using mudarab and musharaka. So there, the depositor is a rabbul mal, and the bank acts as a mudarib. So the depositor will leave, let's say, £10,000 in the bank, and that is considered ra'sul mal. That's considered an investment. And then the bank then uses that £10,000 and engages in financial contracts of buying and selling things, which will obviously make more money, and the profits from that go back to the depositor. Musharaka works the same, but there's just a technical difference between the two terms, mudarab and musharaka, and we'll go into that now. Then we have wadi'ah. These are the trust contracts. So wadi'ah is like the current account, where you're just leaving money for the sake of leaving money for safekeeping. So there, it's not one of the problems that the Islamic banks face is sort of the dhamana, okay, the dhaman, because technically speaking, wadi'ah is not madmoon. It's not guaranteed. Islamically speaking, wadi'ah is not madmoon. Now, what this means is that if I've left money with you for safekeeping, and Allah forbid, but somebody comes and breaks into your house and takes the money, you are not liable to pay me that money back. Because in wadi'ah and amana, you are only liable to repay if there was negligence. If there was no negligence, then you're not liable to pay the money. So there's no dhaman. Just spare them 1 minute, please, inshallah. Allah Akbar, Allah. We'll just wait for the adhan to finish, inshallah.
أشهد أن لا إله إلا الله أشهد أن محمدا رسول الله أشهد أن محمدا رسول الله حي على الصلاة حي على الصلاة حي على الفلاح حي على الفلاح الله أكبر الله أكبر لا إله إلا الله.
That was just Asr adhan. I've already prayed. I prayed with the students here within Jama'ah just before the lesson starts. Okay. So I was saying about wadi'ah and amanah that technically speaking, they are not madmoon. So unless there's negligence, the person you've left your money with as safekeeping is not liable to pay the money. Wakala and ju'al, again, these are different forms. I won't go into that now. Even the security contracts. So security is more of when you've borrowed money, and the lender asks for a guarantee. So that's like kafala. Kafala is a person who's left as a guarantee. Rahan is when you've left a thing as a guarantee, also known as pawning or mortgaging. See, the word mortgage actually is rahan, because what happens, the reason a mortgage is called a mortgage is when the bank lends you the money to conventional banks, then because the title deeds, so the legal owner of the bank or of the house, those title deeds stay with the bank, and that's their security. So if a borrower fails to pay, then they can sell the house because they have the title deeds. So that security is like a mortgage. And that's why, that's why we say that the term Islamic mortgage, everyone uses it, and that's the easiest way to understand it. But strictly speaking, it's incorrect, because a mortgage is a security after advancing a loan. A mortgage is a form of a security which is taken by the lender after he advances a loan. Now, an Islamic bank doesn't do that. It doesn't advance a loan, so there's no security that's being taken either. So the Islamic mortgage and it is not actually the correct term. I mean, we all use it, but and that's fine. But you know, as we're studying, strictly speaking, there's no concept of an Islamic mortgage the way the conventional bank does this. Hawala is a very interesting topic. Again, I won't go through this now, inshallah, in some later lessons. A lot of this will be covered anyway. Okay, this is another way of looking at the Islamic in financial intermediation. So we have investors, the depositors on the left-hand side. They will engage either in mudaraba, wakala, or wadi'ah with the Islamic banks. The Islamic banks, in order to remember, the financial intermediation that they will engage in with borrowers will be through mudaraba, salam, ijara, istisna', mudaraba, or above was murabaha, and then we have mudaraba, musharaka, and at the bottom we have rahan. So this is basically the terminologies that Islamic banks use and the kind of contracts that they use also. So on the left-hand side, really what depositors are doing is, if they want to make further money from their bank accounts, then they will have to engage in a mudaraba or wakala contract with the bank. In the wadi'ah and amana contracts, they can't, because there they've left the money simply as safekeeping. So they can't take anything further from there. In wakal and mudaraba, they can, and the Islamic bank itself, and then will use one of these contracts to then engage with the borrowers. Inshallah, again, at a later stage, I will give you examples of how all of this is done as well. Okay, now major Islamic contracts used in Islamic finance. We've got the sale contracts, and we have the leasing contracts, we have partnerships, and then interest-free loans. Okay, some of this has been covered anyway, and what I really want to do is spend some time on the two house financing models that we have. Okay, so one of the first methods of house financing was modeled on the murabaha contract. And what happens in the murabaha contract is the bank purchases the house from the seller and then sells it to the client on a deferred payment basis with a profit. Now, murabaha is a form of a bay'. Okay, so if we understand, or if we go back and we recall that bay' is really a transfer of ownership. And if you remember, in one of the earliest, second, or maybe third lesson, I reiterated this point that the fundamental point that's discussed in buyūʿ is there a valid transfer of ownership or not? Now, in all of the masail, that's what we're trying to ascertain. Is there a valid transfer of ownership? Because remember, in bay' fasid, there is a transfer of ownership. It's not a valid. It's a defective. It's a corrupt transfer of ownership. So all our masail and all our discussions are focuses on this one point, that is there a valid transfer of ownership? And if not, then what can we do to correct it in order to make it a valid transfer of ownership? So a normal bay', where I go to the shop and I buy a packet of bread, that's called musawama. Okay, the word musawama. And the word sawm comes in the hadith also. Murabaha is from the word ribh. Ribh meaning profit. And what happens the only difference between murabaha and musawama is that in murabaha, the buyer knows the profit which the seller is making. In murabaha, the buyer knows the profit which the seller is going to make. That's a fundamental difference between musawama and murabaha. So when I go to the shop, or someone goes to the shop and they buy any commodity, that's musawama, because most likely we don't know the profit that the seller is making. Or to be more accurate, the seller has not told us, and our contract is not based on the profit which the seller is going to make. Okay. Now, why I say that is, if we take the example that I've gone to a shop to buy something, and it just so happens that the commodity I'm buying was sold to that shop by a friend of mine. So let's say I've gone to a shop to buy a laptop, and the laptop's £1,000. And it just so happens that the company that sells the laptops to this shop, I know them very well. And I know that that company is selling the laptops to this shop for £800. So I know that this shop is making £200 profit per laptop. That's still not murabaha. And the reason it's not murabaha is because when I've gone to the shop, my transaction with the shop is not based on the shop making £200 profit. It just so happens that I know the profit which is being made. Now, why this is important, again, the entire discussion will come in Fiqh al Buyūʿ itself, is because what happens if the seller says to me, I'm making £100 profit only, and I say, okay, I'm buying the laptop on this understanding that you're only making £100 profit. If it transpires later on that the seller is actually making £150 profit, then under certain scenarios, I can actually revoke the transaction. So just merely knowing the profit doesn't make murabaha. The transaction must be made on and based on the profit which is being made. I hope that's clear. So the first method of house financing was called murabaha. And the reason it was called murabaha is because here the buyer of the house will know exactly how much the bank is going to make. And the bank will disclose that to the buyer. Now, the reason the buyer knows is I'm looking for a house and I identified the property that I want, and it's £200,000. So the property I want is 200,000. So I go to the bank and I tell the bank that this is a property that I would like to buy. We'll go through the steps later on, but the bank is happy to purchase a property. The bank does its calculations and says, okay, you will be paying back £230,000. So I know how much the house costs. I know how much the bank is buying the house for. And I also know how much the bank is going to sell the house to me for. And therefore it's a murabaha contract. Okay. So in the murabaha contract, the bank purchases the house from the seller and then sells it to the client on a deferred payment basis with a profit. Now, one of the points I need to mention here is that, the deferred payment, that's not a condition of murabaha. So although financial institutions and banks always have the deferred payment there, that's not an integral clause of murabaha. Murabaha is simply when the seller discloses a profit to the buyer. The deferred payment, which the banks operate on, is there to facilitate the payment. Because if there was no deferred payment, why would the client need the bank in the first place? If payment to the bank had to be made immediately, then the client would never have gone to the bank in the first place. Okay, now that's a simple method, but a complex method involving several steps which must be kept independent of one another have to be there. Okay, now let me tell you what this involves. Number one, I identify a property. Step two, I tell the bank that that's a property I want to buy. So what the bank does, it buys that property. So that's one transaction between the bank and the seller. The second transaction is once the house has been sold by the seller to the bank, it's come under the liability and ownership of the bank. I will now engage in a second contract with the bank. I will engage in a second contract with the bank. Now, just on those 2 points, can anyone see any problems so far?
There's nothing compelling you to execute the second contract.
There's nothing compelling me to execute the second contract. Anything else? Is there anything compelling the bank to sell that to me? So just the way there's no guarantee that I will buy the house from the bank, there's no guarantee the bank will sell that house to me. Number 3, let's say the bank says that, no, we are going to sell it to you, but you know the price that we first discussed of 230,000, we've now increased it to 250,000. So these are independent contracts from one another. But something needs to take place before all of this to make this into one contract. What they call the master agreement. So the master agreement would be that Ibrahim is buying the house from, Ibrahim has identified a property. The bank will buy that property at this price. Ibrahim promises to buy the bank from, buy the bank. Ibrahim promises to buy the property from the bank. The bank promises to sell the property at this price. Okay. Now, what's the problem there? You may have heard of صفقة في صفقة وصفقة في صفقتين وبيعة في بيعة وبيعة في بيعتين. When one contract is tied up to another contract. This is bait facet. So one contract is tied up. It's dependent on a second contract. So how does a bank ensure that I am going to buy the property from the bank? So, you know, the master agreement became very problematic because the bank, like I mentioned last week, the bank doesn't want physical assets in its name. If you remember, the whole purpose of a bank is there as a financial intermediary. It wants to borrow funds from one party and then immediately send those funds out to another party. And it just wants to play with the interest. That's all that the bank wants to do. Now, for conventional banks, it's fine because they deal interest. But an Islamic bank can't do that. The Islamic bank can't borrow money and then lend that money out. So the bank is going to have to buy a property. Now, that's very risky because remember, one of the conditions of a bayt, which inshallah will come in the kitab, is that you can't sell something unless you own it. And you can't sell something unless you have full possession over it. So, you know, the property that the bank's going to sell to me, it can't sell that property to me before it purchases the property. neither can the bank sell the property before it's taken physical possession. Now, if it takes physical possession, when do we say that the physical possession has taken place? Because like a car is very simple because it's movable, it's manqul. But a house, real estate comes under what we call Buyūʿ al-aqār. These are things which are immovable. They are real estate, land and property. They don't move. So when does that land or that property come into the possession of the bank? It has to stay in the possession and ownership of the bank for some time for us to say that there's been a valid transfer of ownership and possession from the original seller to the bank, which will justify the bank now selling that property to me. The risk is, what happens if during that 1 hour or during that 1 day or 1 week where the property is in the ownership and possession of the bank, that there's a catastrophe, there's a hurricane, there's a fire, there's anything, and the property is destroyed. That's a risk of the bank. Now, no bank wants to engage in such a risk. It doesn't serve their purpose. It's too risky. So, one of the suggestions which came out, and some banks actually practice this, was that what they started doing was, remember, I'm the buyer, okay? And I'm the one that wants to live in the house. So the bank, when I approach the bank to say that this is a property that I want to buy, now really what's supposed to happen is that the bank buys a property. Now the bank's just a building. So the bank has its team that will go and execute that transaction. So the bank has its people. One of those people will go to the property, have that transaction with the vendor. The property comes into the ownership and possession of the bank. Then another team will engage in a transaction with me. But because of the risk factor, what some of the banks suggested and came up with is, instead of appointing their own team, why don't they just appoint me as a representative of the bank? So I'm the wakil of the bank now. So what I do is I go to the vendor, I buy the property on behalf of the bank, and immediately I sign a new contract as a buyer from the bank. So within a few minutes, it's changed ownership and possession from the seller to the bank, and then the bank to me. But the bank doesn't appoint its own members or team to do this, it gets me to do this. So I'm the wakil, but I'm also the end buyer also. In any case, as you can see, that this causes a lot of problems. There's too many objections that this raises. Okay. And due to this, it became less favorable. So murabaha isn't really practiced by the banks anymore. I just want to mention one point here also, that we're using the house as an example, but the same would apply to cars, apply to any other buildings. Islamic banks do this for machinery also. So if you've got small enterprises, small businesses that want to buy machinery, then they can do this on the same although we move away from murabaha, but the same concept of murabaha can be used also. Okay. Are there any questions before I move on about the murabaha itself? No? Okay. The second method of house financing was diminishing musharaka. And a lot of you may have heard of this, the diminishing musharaka. Before I continue, does anybody have a property with diminishing musharaka? Or anybody aware how this works? Okay. So musharaka is when two parties invest capital. Mudaraba is when only one party invests capital. Musharaka is when two or more parties invest capital. So that's one of the fundamental differences between musharaka and mudaraba. So in the second method of house finance, which is the most prevalent, there are three different contracts. Number one is musharaka, or two different contracts. The first one is musharaka, and that results in shirkatul milk. Okay. The second contract is bay', and the third contract is ijara. Okay. Now, we'll come to the diminishing part later on. Okay. So what happens is the bank and client jointly purchase the house with the majority share belonging to the bank. Okay. So what happens is, I should have put this in stages. This is an presentation which we've done maybe a couple of years ago. So I think, inshallah, I'll just have to make sure that it's in phases now. What happens is, if we take the example, a property is worth 100,000. Okay. So the bank and client jointly purchase a house. So the client will make a deposit or a payment of, let's say, £10,000. And £90,000 comes from the bank. So there's musharaka because two parties have invested capital. So there's a shirkatul milk. Shirkatul milk has already taken place now. 90% belongs to the bank and 10% of the property belongs to the client. The client then engages in two contracts with the bank. Number one is an ijara contract. So the client will pay rent on the share owned by the bank. So because the client wants to stay in the house, but 90% of the property is owned by the bank, what the client does, the client will pay in rent on 90% of the property. So if we say that the property is £1,000 rent a month, so a property of this value, of this structure, in this area, then the ideal rent will be £1,000. But because the client already owns 10%, the client will only pay rent on 90% of the property. So the client is going to pay £900 rent to the bank. So that's one contract, and that will be done on a monthly basis. Then the second contract is that of bay'. And what the client will do is, periodically, the client purchases the bank's share. So let's say every 4 months or every 3 months, the client buys 10% from the bank. So they started off with 90% belonging to the bank and 10% belonging to the client. After 4 months, the client pays £10,000. This is aside from the rent which is being paid anyway. So the client pays another £10,000 and the bank sells 10% of the share. So now the client owns 80%, the client owns 20% and the bank owns 80%. Obviously, what this will mean is that the rent goes down also. So now the client is paying rent only on 80% of the property, not 90%. After another 4 months or 6 months, again, another 10% is purchased. So what happens is the share of the client is increasing and the share of the bank is diminishing. That's why it's called diminishing musharaka. So the musharaka, which took place between the bank and the client, is diminishing because the bank is selling its shares of that property. Okay. This is how diminishing musharaka works. So they start off with shirkatul milk, musharaka. Then there are two other contracts, bay' and ijara. And inshallah, you can go over this when the video is sent to you. But this more or less just explains everything I've just explained also. Now, Okay, the Islamic, this Islamic bank accounts, inshallah, we'll do that in another lesson, much later on now. We won't do this now. One of the problems that we still find, and this is relevant to what's coming next in Fiqh al Buyūʿ, is, the challenge that we face in murabaha. Now, what guarantee is there that the client will buy the property from the bank? That challenge is still there now. Even in musharaka, diminishing musharaka, that challenge is still there. Because the bank could buy the property. Oh, one thing I forgot to mention, even in here, the bank will buy most of the property from the original seller. But there's still nothing guaranteeing that the client will engage in the ijara contract, and there's no guarantee that the client will engage in the Buyūʿ contract either. So that risk of the bank having an asset on its name for 20, 25 years, that risk is still there. So what happens now? Now, in the murabaha contract, if you think about it, one of the challenges was also that if the bank sells the property immediately to the client, that's gone from the bank's accounts. So the bank could purchase a property and 1 hour later sell it to the client. And generally speaking, within 1 hour, those catastrophes, those fires don't happen. So there's minimal risk. But the biggest risk is defaulting in payment. That you're expecting the client to pay you over 25 years. What's a guarantee that he will? The property belongs to him now. In the ijara, in this diminishing musharaka, the risk is that the property stays in the ownership, even though partially in the bank's name. So over the 15, 20, 25 years, that the bank still owns that property, even though it could only be 10%. So it starts off with 90%, and every few months, the client is buying shares from that property. So the shares of the bank are diminishing. But even after 10 years, the bank still owns that property, part of it. So the risk is still there. But that's another discussion. So, but the question about whether the client will engage in the ijara contract and the Buyūʿ contract on a regular basis, that problem is still there. Now, that's obviously one of the biggest concerns for the banks. So what happened was the whole discussion of a wa'ad came into it. Now, in Fiqh al Buyūʿ, Mufti Uthmani Hafidhahullah has discussed this in some detail. And one of the reasons that he discusses this in some detail is because he faced a lot of criticism for this. And very briefly, what this entailed was the banks were told, and financial institutions were told, that make the clients sign a document in which they're promising to engage in the second and third contracts. So whether it's a murabaha one, whether it's a ijara one, whether it's the Buyūʿ one, whatever it is, that the client has to sign a document that he will engage in the second and third contracts. Now, the problem is that, Islamically speaking, that's just a wa'ad, that's just a promise. Now, according to most ulama, a wa'ad is diyanatan enforceable, meaning that if a person doesn't fulfill his promise, then he'll be sinful in the eyes of Allah subhanahu wa ta'ala. But it can't be enforced by law. So if I promise somebody that, don't worry, you buy your house and inshallah I will lend you £50,000, and the person says no problem, he identifies a property and he comes to me and says, look, I've looked at property, inshallah if you can transfer the £50,000 to me. And I say, I've changed my mind, I don't want to lend it to you anymore. I've broken my promise, so diyanatan, I'm mas'ool 'inda Allah. But the courts can't force me to lend him the £50,000. So qada'an, a wa'ad cannot be enforced. Now, like I said, majority of the ulama said this. Some ulama were of the opinion that no, in certain scenarios, a wa'ad can be enforceable by qada, even by the courts. Now, Mufti Uthmani Hafidhullah, among other ulama, they took that opinion. That for financial institutions, that's a fatwa we should give, that the wa'ad will be enforceable. So that document which the client signs right at the beginning, so the master agreement I spoke about. So in that master agreement, the client signs saying that I will engage in the second and third contracts. Strictly speaking, or classically speaking, that's just a promise. It means nothing in the eyes of the courts. But the fatwa which these ulama gave, that no, the wa'ad will become enforceable. So I won't elaborate on this further because all of this does come in Fiqh al Buyūʿ, and Mufti Uthmani Hafidhullah does discuss it in a lot of detail, and it was partly because of the criticism, the heavy criticism that he faced, mainly in Pakistan, after this fatwa was issued. So that's how the whole, the guaranteeing was overcome, by having a wa'ad iltizami, what they call a wa'ad iltizami, that the client promises to engage in the second and third contract. Even though he promises to engage in the second and third contract, there's still nothing physically enforcing him. So again, another wa'ad was made that if I default in payments, then, because what happens in conventional banks is that, remember, they pay interest. So if you default in your interest payments, then they increase the payment that you have to make. Now, an Islamic bank can't do that, because once you've agreed on ijara, that stays for that term. You can't increase anything now. So one of the wa'ad which was discussed is that the client will do tabarru. The client will give X amount in charity. That I promise that if I default in my payments, I will give X amount in charity. So that's another wa'ad, which was an inshallah, and we'll discuss this in some detail later on also. So as in, whether this was a valid wa'ad and what does it mean for the bank, can it be given to any charity and so forth. Inshallah, all of that, we'll discuss later on. For today's lesson, I just wanted to basically introduce what an Islamic financial intermediary will look like, how the Islamic banks do the house financing. There are a lot of other discussions relating to Islamic banking, but inshallah, we've got a long time left before we finish the kitab. We've been studying for almost 6 months now, and we've done probably about a quarter of the kitab, just about not even quarter, not even quarter. Okay. Alhamdulillah, we've been praying a lot of detail. So till we've got a lot of time, inshallah. So hopefully over the good few months that we have, I will be speaking in more detail on all of these topics. We won't be coming back to Islamic banking for some time. The next time we have a lesson like this, inshallah, I want to introduce Islamic insurance. Again, the term Islamic insurance, strictly speaking, is an oxymoron, if you like, just like an Islamic mortgage. Inshallah, when we look at that, I'll explain to you why. But we'll look at the Islamic model of conventional insurance, what we call takaful, and how that works, inshallah. We've got a few minutes left. Like I said last week, that inshallah we won't have a lesson next week because it'll be Eid. The week after that, inshallah, we will be continuing with our lessons as normal. Jazakumullah khairan to everybody again for attending. I know over the past few weeks we've had less people attending the live lessons. A lot of people are listening to recordings. Those of you who are listening to the recordings, inshallah, if you can try and attend the live lessons at least twice a month, because one of the things that I mentioned, or I was mentioning quite a bit in the first few lessons, and I want to reiterate this, that I do want the students to engage in the lesson, ask relevant questions, and even if there's an opportunity to have a discussion, inshallah, it's always healthy, and it's useful for everyone. So inshallah, those of you who are listening to the recordings, and I know most of the students are, because of some of the feedback that we're getting later on also, and so you do listen to the recordings, but inshallah try and at least twice a month engage in the live lesson also. But jazakumullah khairan to everybody for attending the lessons, or at least listen to the recordings. I hope that these 2 lessons specifically, or 3 lessons specifically, and before that, all of the lessons have been useful to you. Are there any questions that anybody has regarding anything that we've looked at today?
I have a question. So the model you presented before Musharaka, I think it was Murabaha.
Sorry, say that again.
The house financing model, the first one, it's Murabaha.
Yes,
correct? Yes. And so you said it had faced heavy criticism, even though both Murabaha and Musharaka have to use the wa'ad that's enforceable. So why is the Murabaha receiving more criticism?
Okay, so the wa'ad issue was one of the challenges, but the reason Murabaha faced a lot of challenges was because if the bank, so remember I told you that the bank appoints, or really what should happen is that the bank appoints one of its own team to execute the first transaction. But what this means that that's just rising costs for or it's extra costs for the bank. Now it has to have a complete new department. It has to employ more people that will go and execute those contracts. Now the bank didn't want to have those extra costs. So what the bank said is, okay, the client that wants to buy the house, we'll just use him to execute that contract. So he becomes the wakil on behalf of the bank to execute the first contract. But that itself raises a lot of questions, because when the wakil purchases a property, okay, when it comes to the ownership, remember, although the ownership will belong to the bank, the possession rests with the wakil. The possession rests with the wakil. So when the client now signs a new contract of buying the property from the bank, the problem is that the property is still in the possession of the wakil. So it's as though he's buying from himself. So this is one of the major difficulties that they faced, because they didn't want to employ more people to go and execute those contracts, because remember, they'll have hundreds of properties being bought and sold on a daily or weekly basis at least. So they can't just have a small team doing this, because the house financing process will take months and months because of the amount of people that or clients that they'll have. So neither can they appoint a new employee for every single contract that's taking place. So to avoid those costs, one of the things that they did was to start appointing the client himself as a wakil, but that has its own problems because of the liability and the possession. So what are we going to call this qabd as? Is this yad, what we call yad aman, yad daman? So that's one of the discussions. Then, how long should the bank keep the property in its possession before it sells? So if the bank buys a property and a minute later the client signs a contract buying from the bank, technically speaking, yes, it's transferred from ownership to ownership. But is that sufficient time? Mufti Uthmani Hafidhullah, he suggested to the banks that he was advising that you should keep the property in your name for 3 months. If I recall correctly, what I heard from him was that you should keep the property in your name for 3 months before you sell it on further. But that was too risky for the banks. 3 months having a physical asset is too risky for the bank. So obviously a lot of banks didn't adopt that. So these are just some of the discussions that were taking place.
Okay, I understand. And practically in the industry, do you see the Islamic financing institutions adopting musharaka more, or do a lot of them still use murabaha?
No, most of them use the musharaka method now.
Okay.
Most of them use musharaka method. Jazakallah to the sister that just sent a message. I'll just read the message out if that's okay for everybody, inshallah. Jazakumullah khair. This was my first session. I just recently joined the course. Inshallah, we'll try and catch up on the recordings as soon as possible. I do hope that, inshallah, the lessons were, and I hope that you'll find the previous lessons useful as you found today's lesson, inshallah, also. Jazakumullah khairan. Are there any other questions that anybody has? No? Jazakumullah khairan. Like I mentioned last week, inshallah, I am traveling, so make dua for my journey as well. And the next couple of lessons I'll actually be teaching from Australia, not here in Leicester, from the UK. Inshallah. Jazakumullah khairan. Assalamu alaikum wa rahmatullah.